Good morning, ladies and gentlemen. A very quiet but modestly positive start to the last street on Tuesday. The Nifty is up 68 points. Flat as flat can be is Nifty Bank, but very heavy activity on the long side on the Nifty IT index 35,145. The buyback to be announced by Infosys in terms of volume and value has boosted sentiment. Infosys by itself is the top traded counter, 4.5% higher at almost 1497 is the top draw for traders and investors at this point of time. Remember, IT has been a beaten down subject for the last many months, and buybacks in quality companies which are cash rich, debt free, have always added to sentiment. In terms of all time highs, there are predictable patterns. Lots of them from gold financing companies, lot of them from auto companies. So Eicher and Maruti, two-wheeler and four-wheeler giants from the auto space in top shape, 1% higher on Eicher, 6882. Maruti now well above 15,000, 15,300 to be precise. And of course, the two gold financing companies, Mannapuram at 292.30 and Muthoot Finance at 29.36, 1.2% higher. Broadly, there is nothing much to report about in terms of volume, in terms of advanced decline, but the markets are modestly positive is all that we can say. To get a better feel of the market, we are now joined by Mr. Arun Kejriwal, a market veteran of more than 3 decades. He will decipher intimate moods as well as broader rallies that are happening in several sectors, in particular auto. Namaste to you, Arunji, and a very warm welcome. Markets quiet post the GST rejig, except for the auto index. What are your broad thoughts on the market sentiment at this point of time?
So, very clearly, the entire pattern, RBI, the pay commission, the GST, uh, some sort of correction to what the Trump tariff war has been doing to the country, GST rejig. I believe all of this is pointing to one direction. The government believes that large scale consumption that could happen in the upcoming festival season will drive demand, will drive consumption, and will help India stabilize many of the blows that could come with exports to the US getting curtailed. I believe a couple of things further are going to happen. The new world order is going to see some changes. The fact that you had India, Russia, and China on the same platform, available on number of photo op situations at the SCO meeting, indicate that things are changing. Besides this, I believe many other countries are also realizing that the big bully that the US is something that cannot be tolerated, and possibly resistance to the big bully is happening, coming from number of countries. Brazil is one more such country who joined the bandwagon. So there is also, if I may say mildly, don't get me wrong when I say it, that there is a anti-US bullying front that is slowly and steadily emerging on the global order.
Okay. Arunji, have you been enthused by the reaction of the market to the GST rejig? Apart from the auto index, nothing seems to have moved beyond a certain point of time. The likes of FMCG and all are quiet, but it's the auto that is doing wonders. The auto index now moving to a record high. Similarly, many auto companies, Mahindra and Mahindra, Maruti, Eicher, TVS Motors, all at fresh peaks.
So let me answer that question in two parts. The first part is on technicals. What happened on Thursday was a big disappointment. Markets opened higher, significantly higher, If I remember correctly, the Nifty was up about 250 odd points. The Sensex was up 890 odd points. And the open was the high. And we closed marginally higher than the low of the day. To put it mildly, the entire gains on the GST rejig were digested, wiped off, and we closed marginally higher at the end of the day, and all in 6 hours of trading. So very clearly, if what happened in the metal and auto pack, which were the top gainers, did not happen, it would have been a disastrous day at the markets. Uh, did I expect such a muted response? The answer is certainly no. Reality is, of course, something different. Uh, the auto pack is doing wonders simply because the majority of cars, two-wheelers, would all come under the reduction of GST that would happen, which would make affordability increase subsequently substantially. So you could see a bumper season coming up. And the fact that auto numbers for August were a disappointment overall also indicates that this GST cut that was expected and has happened will lead or translate into better numbers uh, come Dashera. And Dashera, mind you, is a little over a month and a half away. So good tidings for the auto sector, but overall, nothing great from what the GST rejig has done. However, there is plenty of hope as far as the electronics sector is concerned, consumer durables are concerned. I believe you should see traction even in these sectors when actually the festive season begins.
Arunji, one thing is to be said that apart from auto, nothing else moved much. So, what is the market actually looking forward to? The government, on its part, over the last 4 months or so, 5 months or so, has done anything and everything that was possible. There was an income tax cut in the budget. Borrowing costs have been reduced by 100 basis points. You have a GST rejig. You have an India ratings upgrade. Pretty much all that was expected is there. But what's the missing link according to you? Why aren't the markets up as they should be?
So two way to look at it and answer it. The first, markets ran up ahead of time in the previous year. We had a great 2.5 years of rally. And if you could say so, that right from March 2020, post-COVID setting on, markets have had a phenomenal run over about 4 years. Uh, Coming to the quarterly performance, June 25, they were a disappointment. We have seen the lowest growth witnessed over 7 quarters. It's not a good sign. And as you mentioned earlier to this question, that the government has done almost anything and everything that was within its capacity. In spite of that, we haven't seen positivity coming in into the numbers, which leads you to believe that somewhere or the other, markets have become a little heavy and they are reacting to the fact that the expected growth is just not happening. Now, with the GST rejig, the expectation is that there would be a consumption led increase in revenues, which could drive some sectors positive upward. For example, of course, the auto is the best example. Rural demand could pick up, helping FMCG companies, electronics, white goods, consumer durables, etc. At the same time, there is uncertainty on the export front, what with the US doing what it does. Uh, I believe all of this would probably lead to clarity in another 30 to 60 days. by which time we would be somewhere in the middle of Q3. And that would be the time when we would have clarity as to what the new global order would be. I believe there will be some sort of relaxation coming in on the way things stand today. At the end of the day, America is also a large country as far as population is concerned. They have huge demands, and fortunately or unfortunately, they do not manufacture everything that they consume. So they need imports from different countries, and the current sources from which a bulk of these goods are met or the demand is met comes from China and India. So to ignore both of them, to have cross swords with both of them, will not do their economy or their population good.
Okay. If at all, Arunji, are you deploying any fresh cash at this point in the market, or are you sort of taking it easy?
Very interesting question, Shell. To be honest, I am sitting tight. There have been no new investments, let's say in the last 15 to 30 days. It's more of a wait and watch attitude. And I believe indications about Q2 results will be a fair time when you could look at investment all over again. Nothing gets lost in a day, or nothing gets, you don't miss the bus if you don't do anything for 10, 15 days. So I believe post Q2, as the results start trickling in, you will get to see where there is traction coming in. Let's understand the consumer sale and the consumer demand that we are talking post GST is not going to come in Q2, is going to come in Q3. So that is not the trend that I would be looking for. But you would find interesting commentaries coming based on the demand, the market expansion that would happen, plus clarity that I expect on the tariff and export front, because new unions would also be made, new trade treaties with other countries would also happen. And let's also understand, besides the US, the EU is also dependent on a lot of imports from various countries.
Right. In the early part of your conversation, you mentioned both auto ancillaries and autos doing extremely well, and that the Shara about a month away should be something to rejoice about. In your opinion, are there any buys left in these two spaces? Auto, by and large, is at a record high. A view that you might have on Tata Motors at this point of time, well below its all-time high of about 1150.
So Tata Motors has been an underperformer, and it was badly hit with the sanctions that came in. They seem to be getting their act together. I believe price cuts that people are now talking about post GST will be a big factor. I don't know whether it is worth talking about, but today there was a very interesting ad in the financial paper in Bombay where Mercedes, which you don't normally see advertising, is talking about you booking cars for the festive season with the GST price cut factored in, so that you get your delivery on your chosen day, which clearly shows that somebody, even like a Mercedes, is hoping that they would reap a bountiful returns from this GST cut, even though there is not much that is going to happen at the higher end of cars. But there is this feeling. So I believe it's something not to be ignored totally. Uh, but on your question of whether there is juice left in the auto rally, I'm not too sure at this point of time. If numbers surprise us on the upside, possibly we could have a relook. But currently, I think market has factored in everything in this close to 10-12% rally that we have already seen in auto over the last 5-7 days.
Fair point. I think the auto index is amongst the top performers. I remember looking at it yesterday morning, and very, very strong rally that we've seen in the auto index. When you look at the comparatives with the other indices, you've had about 14% rally since October 18th. The GST
Correct.
cuts were announced, remember, on Friday, the previous Friday, August 15th. And from then on, the auto index has appreciated to the extent of about 14%. And if you look at from our April lows, that number is a phenomenal 40%. So if you are a good picker of the bottoms, then a 40% rally so far from a multi-month low to an all-time high on the auto index, just in a span of about 5 months or so. So that's the state of play as far as auto is concerned. A view on gold, Arunji. A very, very sharp rally is upon us. Gold has moved 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days in a row, and so have companies such as Mannapuram and Muthoot Finance. What is your prognosis on this very sharp rally that we are witnessing in gold prices?
So at times, if you look at it rationally, it defies logic. If you look at it irrationally, the one driving factor is the fact that central banks across the world are buying gold, even at these new lifetime highs. This makes retail investors or smaller investors, mere mortals like you and me, also think, are we missing the bus if we don't get into the gold buying rush? At the same time, one needs to look at it as to what is it that you are doing by buying gold. Is it just that you believe that stock, paper, as we also call it, is not going to have any value and all value will only come from gold? So I'm not too sure. It also gives you a feeling that there seems to be some sort of madness that I don't want to miss out, or as we call it in the market, FOMO, fear of missing out, which is driving this demand. But while I don't want to make a prediction that after a 12-day or maybe a 13-day rally, there should be a correction on technical grounds. But from a safe haven investment, I wouldn't look at gold at these prices. I would wait for some sort of a meaningful correction before I look at gold as a investment.
Okay, fair point. Would the view be similar on Mannapuram and Muthoot? Both are gold financing companies. Both have gone up about 40% in the last 6 months or so.
So I believe here there is an underlying thinking that some of the loan that has been given by the companies will not get liquidated. The people will not come back to claim their gold, and therefore the collateral that the company has could get sold, which would give the company hidden gains. So some sort of that factor is there which is driving this price up. Rational, irrational, combination of both. But historically, when gold does rally very strongly, a lot of gold loans sort of tend to default because they would have to repay the money and take the gold back, which people are not sure whether they'll do it or not. And remember one thing, gold is typically lent when you are in acute difficulty. You don't borrow against gold at good times. So that could be a factor. I believe commentary at the end of Q2 when the management does do a call would be interesting to follow.
Fair point. Anything in particular that you find attractive at current levels as far as the market is concerned? Maybe it is on your radar, you're not buying, but still worth a look?
So I believe while I don't have things on the radar, and like I said, I would wait for Q2 number indications before I jump in. I believe we've had a huge number of IPOs in the last 6, 7 months of this calendar year. We've also had a large number of IPOs all through FY25. Quite a few of them are well below their IPO prices. And uh, cherry picking from amongst this could also be a good idea. You don't have to necessarily look at companies which are listed for a number of years, but also here, where probably after the IPO listing, the hype that is created when a company goes public, all of this gives you an opportunity to sort of reinvent the company, look at it all over again, and then invest. So no names as of now, but this is a space where I'm spending some time trying to find ideas where investments could be made in the coming future.
Okay, right, sir. With that, we'll call it a day. As always, thank you so much for your time. And we all hope that Q2 brings in good cheer to the market. As far as the macro is concerned, it's all in place. People just have to put their minds to work and start buying quality stuff. Thank you so much, Arunji.
Thank you. Thank you, Shell. Thank you for having me over.
That, ladies and gentlemen, was Mr. Arun Kejriwal as far as the views on the markets were concerned. 11:23 for you. The market in good shape. The IT index is the top gainer, 2.5% higher, mainly on account of the buyback that Infosys has announced. Infosys in itself is also amongst the top traded counters, 4.5% higher at 850. Beyond that, the market is quiet, but there's a light shade of green across the last street. Thank you for watching.